And now, here comes to me the biggest risk about property ownership when you are financing via a mortgage bond. Is it better to rent or buy property? In this video, I'm going to be discussing this subject, which has become topical, largely influenced by rising interest rates, specifically within the South African context. My views on this subject are largely influenced by my personal experiences as someone who has bought and sold multiple properties in my lifetime and also been a tenant to a landlord. So I hope you gain some insights from this video, especially if you are considering buying a property. You are watching the Financial Metaverse. So let's start off by looking at the advantages of renting versus buying a property. Of course, when I talk about buying property, we're talking about a property that is financed via a mortgage bond. So what are the advantages of renting versus buying? Firstly, one of the advantages of renting is that there are no significant onerous requirements for you to be able to rent a property. Most landlords will simply require your proof of employment or affordability via your bank statement. As long as you can satisfy those requirements, you will be able to enter into a rental agreement. As opposed to purchasing property via a mortgage bond where you have to apply for finance through a bank, which will require a good credit record, which will require, of course, proof of employment and proof of affordability and so on. But clearly, renting a property is much easier than being able to buy a property, because even if you can prove that you can afford to finance a property via a bond, if the bank is not satisfied with the length of your credit history, they still may not approve your financing. And if they do approve it, they may charge you or penalize you by charging you a higher interest rate, which factor does not apply when you are renting a property. So for me, that's one of the most important considerations to have when you are looking at, renting versus buying a property. Number two, the length of the agreement when you are renting is much shorter, obviously, usually 6 months to a year, which can be renewed with your landlord. So you are not stuck with a lengthy agreement as is the case with a home loan, which typically binds you to a 20, and of late we see 30-year loan agreements becoming the norm. So that is definitely a very important factor to consider. Thirdly, when you are renting as a tenant, you have the flexibility, of course, to move around and find a place or a neighborhood that you feel comfortable with. So you're not stuck on this long-term agreement that binds you and makes it difficult for you if you get a job offer elsewhere. You have to really think long and hard about what you're going to do with the property. When you're a tenant, usually you can just give a month's notice before you can terminate the lease agreement with the landlord. Number four, renting is usually cheaper than buying a property. If, for instance, you were to purchase a property that is worth 1 million, at a 10% interest rate, you are looking at a bond repayment of around 10,000 per month. The same property, if you are renting it, you will probably be paying around 8,000 or so a month on average. So usually renting is much cheaper than purchasing a property, just purely from the rental amount that you are going to be paying for that particular property. Number five, when you are renting, you avoid a number of costs that are associated with home ownership, such as levies if you live in a townhouse complex, such as rates and taxes, such as municipal services like refuge collection, such as the maintenance of the property, the insurance on the property, and the life and disability insurance that banks normally insist on when you are financing the property via a mortgage bond. So we've discussed some of the advantages of renting property. What are some of the disadvantages? Well, one, you cannot make any changes or alterations without the landlord's approval. Secondly, you may find that the landlord is not quick to attend to renovations or basic maintenance of your property, which may leave you having to fit that bill with the hope that you may be able to recoup or claim those expenses at a later stage. Number three, there is uncertainty as to your tenure within the property, especially if the landlord decides to sell or goes into financial difficulty and perhaps the home is to be foreclosed, and you may find yourself quickly having to find alternative accommodation. And perhaps related to that, the landlord may not be paying the municipal bills or services. I've seen that happen. And you might find yourself with the power that is blocked and you can't purchase electricity. That becomes your problem, although it should be the landlord's problem. But since you're obviously living in the property, you need to find a solution because you won't be able to live in a place that doesn't have power. The other perceived disadvantage that most people typically bring up is that when you are renting, you are paying someone else's bond, and therefore you're not investing in an asset that will ultimately one day be yours. But to me, that's a bit of a flawed argument, because it's either you are renting from a landlord or you are renting from the bank if you are financing via a mortgage bond. Because up until you actually finish paying off the mortgage bond, the home doesn't really belong to you. And if you doubt what I'm saying, just stop paying your mortgage bond for the next 6 months and see what happens to that property. Now, a lot of people will argue with me on this point, because home ownership is largely an emotional decision and not a rational one. But when you actually do the numbers, you may be surprised to find that renting a property may prove to be far more financially viable than actually financing a property or purchasing it via a mortgage bond. Let me use my example, my personal example, in terms of the property I live in. Now, I'm under no illusions that the property I live in is not an investment. It is a liability. Why? Because a liability is simply something that takes money away from you, on a regular basis, where an asset is something that brings in money into your pocket. So for an example, the house that I live in costs me in multiple ways. Firstly, I have to pay the bank the mortgage bond. Secondly, I have to pay rates and taxes. I have to maintain the property. I pay levies where I live, and I pay insurance on the property. I pay life insurance to ensure that something happens to me, that the mortgage bond will be settled. So that costs me a lot of money. Whereas if you look at renting, most of those expenses do not exist. You just worry about paying the rent, and that's pretty much it. The expenses associated with home maintenance, insurance, levies, rates are the landlord's expenses. And now, here comes to me the biggest risk about property ownership when you are financing via a mortgage bond. It is the cost of capital, which is not in our control, because that is determined by the Reserve Bank. Now, in 2020, during the onset of the COVID-19 pandemic, Reserve banks generally throughout the world started reducing interest rates significantly, which made the cost of capital become very cheap. People who ordinarily would not have afforded buying properties suddenly were able to afford these properties, and many people bought properties. Now, 2-3 years later, we're now in 2023, those very same people are finding that those properties are becoming unaffordable. If you look at the rate of increase from 2020 to 2023, you would find that there has been almost over 50% rise in interest rates from 2020 to now 2023, from the low of 7% prime rate to the current prime rate, which is sitting at 10.75%. Now, to give you a context, if you bought a property for 1 million rand in 2020, your mortgage bond would have been around 7,200, give or take. In 2023, today, the same mortgage bond is costing you just over 10,000 rand a month. That is roughly 3,000 rand more that you suddenly have to find in order to afford this very same property. And of course, inflation has gone up as well. So the cost of your rates, taxes, levies, travel, fuel costs, and all of that have also risen quite significantly since the COVID-19 pandemic. So we're finding that a lot of people that thought they could afford property are suddenly finding themselves in very difficult financial situations, where those who are renting property are not in that same predicament, because if you can't afford the house that you are living in, if you are a tenant, you can simply find accommodation that is more affordable. Whereas if you have bought a property via a mortgage bond, it's not very easy to sell, especially in a high interest rate environment. Or if you bought in an area that does not have significant demand from buyers, right? So you may be stuck with that property indefinitely. And if you find it unaffordable, the banks may actually foreclose on that property, which could leave you with an impaired credit record, which will make it difficult for you not only to borrow money in future to finance property, but possibly to find employment as well. So these are some of the important considerations, guys, that you need to make when you are considering the choice whether to rent or buy a property. What I would suggest or advise, particularly if you're a young person just starting out in life, or you just started working and you're excited about, property ownership, is that you first save a significant amount for a deposit on that property. Ideally, you want to have saved up at least a 30% deposit. So if the value of the property is 1 million, you'd want to have saved up at least 300,000 as a deposit towards that property, so that you only finance 700,000 via a mortgage bond. Because at a 10% interest rate, you are looking at roughly paying 6,800 Rand a month on that mortgage bond. This will significantly reduce your financial pressure, especially when interest rates begin to rise significantly, as we've seen in the past 3 years. So some final considerations to make when you have made the decision that you now want to buy property as opposed to renting. Number one, do some research in the area that you want to live. Make sure it's an area that has potential to develop in the future in a positive way. Number two, negotiate with the financial institution that the interest rate that will charge you will be as low as possible. And number three, make sure that you don't borrow at the maximum affordability level, because typically estate agents and the financial institutions will want to persuade you to buy a property at the maximum level of your current affordability, not bearing in mind that interest rates fluctuate over time, as I have explained with what has happened in the past 3 years. So ideally, you will make sure that you give yourself some leeway. So if your affordability is 10,000 Rand a month, look for a property that will be 7,000 Rand or less per month. That will give you some breathing room in events where interest rates and cost of living begin to rise significantly, or you go through some financial pressures. And lastly, strive to try and pay down that mortgage bond as quickly as possible, because 20 to 30 years is a very long time, and there's a lot of things that could happen in between that could affect your ability to afford a property. And the last thing that you want is to be in a situation where you are struggling to pay a mortgage bond and you are not sure what you're going to do in terms of your primary residence. Where if you are a tenant, tenants in South Africa in particular, I think generally across the world, have much more legal protection, because legally landlords cannot just evict a tenant just because they cannot afford. They actually have to work with the tenant and find some kind of amicable arrangement that can satisfy both parties. So guys, this subject can get a lot more technical, but I hope you've gained some value in listening to some of the points that I've raised today. If you have some comments or insights or questions that you'd like to share, please leave them in the comment section below. If you like this video or find value in it, please help me out by liking it and sharing it with your friends or family who are considering buying property. And finally, if you've enjoyed this content, please consider subscribing to this channel and hit that notification bell. And look out for these videos.
I can feel the pain on my back, yeah. Keep on taking pills every day, yeah.